Hi everyone, welcome to our video. This is going to be a recap of what we've done so far this semester. Moving forward, I hope you're going to get more videos from us. Usually at the end of every month, we're hoping to do a monthly recap.
Hello, everyone. My name is Caden Cool, and I'm the portfolio manager this year for DCM. So I'll be giving a quick report of what our portfolio has done so far this year. So looking at an overview, we started off the semester with $1,322,000, and currently our portfolio is worth $1,357,000. That's a gain of about $31,000 since the start of the year, or a rate of return of about 3.66%. That's Unfortunately, we've lost the S&P by about 2% since in that same time frame. We've had a few companies that have done really well. I'll go over that in a second. But our portfolio did reach an all-time high on November 11 of $1,376,000. That was after the election. Everything shot up quite a bit. It was really good. And we've dropped down a little bit since then, but we've been having some strong momentum this semester, and we hope to continue going on into next year. Looking at some of the losers for this year, Crocs is down about 27%. They had some tough earnings and some projections with their Hey Dudes brand that weren't looking as good for investors, so they're down, but they were up quite a bit over the summer and last spring, so we're still in the positive there. Elevance Health and Pfizer are also down pretty big so far this semester. Healthcare companies have been struggling, but we'll hope that they'll make a recovery coming into 2025 and just kind of see what they do. Moving on to the winners, we've had Tesla leading us the way. They're up 57% so far this semester, which is really good. They went up a ton after Trump won the election recently, and they had some strong steam with good earnings and a positive outlook. We also have Wells Fargo, who is up 30% so far this semester, and then Digital Realty up about 25%. So these are some companies that are carrying our portfolio. We have a lot of other companies that have been up about 10-20% so far this semester. So overall, a lot of really good growth. And then finally, I just wanted to touch on the weights of our portfolio. As you can see, we're a little overweight in real estate and consumer discretionary. Our real estate companies have done really well this semester, and our percentage in this sector has really just kept pushing forward and forward. We're still a little underweight in information technology, healthcare, and consumer staples. But I would like to note that at the beginning of the semester, we were 8% underweight in technology and have made a good effort with some buys to get close to even. Overall, our portfolio is pretty well balanced. We're hoping to continue making some adjustments so that we can hopefully begin beating the S&P 500 on a month-to-month basis rather than losing by a little bit. So.
Yeah, so with that, my name is Sam Zalstra. I was the economist last year. Happy to be taking over that role again. And so just looking at the club this semester, we really have been focusing on a lot of different things, whether it be with federal rate cuts or whether it be with election news. There's just kind of been a lot going on in the macro economy. Something we've been focusing on a lot has just been really highlighting to the club what things specifically mean. So when we're talking about rate cuts, there's been 2 rate cuts since the school started this semester, which have been really big, impactful things on the economy. And what we're highlighting is sort of the way the Fed moves and why they move in certain ways, along with the way that inflation affects that, and really highlighting to the club exactly how that continues to function. So one thing we're really watching is as the Fed cuts rates, will that drive inflation continue to have it go down? Will it remain sticky? And then how will that affect the market? Because we've been obviously pretty conservative for the past year, given the way the S&P has reacted to potential recession concerns. But with rate cuts, it's really boosted the market. That's something we've also focused on a lot. Every time something happens, we really focus on a market efficiency hypothesis, where when the market is efficient and pricing things in, we focus on the way the market reacts to different events rather than just really making super, pie in the sky analysis initially. So continuing on, what we've really been focusing on specifically when it comes to the election, we've been focusing on rate cuts as well. And something we really have been focusing on as well is specifically how the election affected the market. Obviously, that's something students are watching. That's something that's a really big talking point. Whether or not students, whoever people voted for, whoever people are rooting for, the market reacted quite positively to Donald Trump's win. And that's something we went over as well. And that's something that we're continuing to look at because obviously Trump is not president yet. We're looking at that in about 90 or so days. And so as we continue to do that, we really want to be looking at what his policies are. We talked about those, why the markets reacted so positively. Once again, from an efficient market hypothesis, talking about why consumers are more upbeat. Generally, consumers feel a lot better under Trump. Whether or not that's an accurate representation of the actual economic, impacts of his policies, consumers do feel this way. And that's why as we move into 2025, specifically, we're looking at a lot of consumer discretionary things. Another thing we're looking at is stability. The market has really stabled out since the election. Now, what does that mean from purely emotional perspective? We have been looking a lot at the VIX, so the CBOE volatility index, seeing just how volatile the market's been over the course of the past year has been very much so a struggle for the club to manage. And it's been quite tough given macroeconomic news consistently coming out in a lot of different directions. And so we're focusing on the continued, hopefully, stability of the economy, which will hopefully make the markets more stable. Obviously, consumer confidence, lower inflation, those sorts of things are good. And moving forward, we are really just excited that the market has generally improved and come out a lot better than a lot of those general recession fears had been for a while. So with that, it's really just about the club's continued confidence in the market and our continued confidence in the fact that the American economy will keep growing. So
looking back at some of the buys and sells that we've had this semester, Luke's going to talk about the sells, and I'm going to talk about some of our purchases that we've made. One of the first purchases we made this semester was TSMC. We managed to time them right before their earnings, and they've done pretty well for us since we feel like we really need to get more exposure in the semiconductor industry ever since our Intel sale, which happened roughly a year and a half ago. That sale ended up being really good, and we just need something in the pretty explosive semiconductor industry just to try and help us compete with the S&P 500. Next, we got NICE, another information technology kind of stock. They deal with some AI stuff, but they're more of like kind of customer service technology, stuff like that. We did buy them before once about 2 years ago. They are down since then, but we really feel like the price earnings ratios and the other valuation ratios that they're trading at, combined with how they're looking versus some of their competitors, we really feel like they're an undervalued stock in this industry. And then Pfizer, we needed some healthcare stocks to kind of balance out our portfolio a little bit, and we feel like they're one of the most undervalued companies in the healthcare sector, trading at a pretty low PE and a dividend yield of close to 6.5%. So we really feel like they'll be a nice, stable kind of cornerstone stock for our portfolio. And then AMD, this is a stock we're hoping to get some growth out of. They use TSMC's products, they kind of sell them. So we're all hoping to get some growth out of that. We're hoping that with Intel struggling, that they're really able to take market share from them and kind of get some explosive growth out of them.
Yeah, looking at some of our sales, as Dayton talked about, we started off selling CVS. This is a company that we've held a long time and really appreciated their almost 5% dividend. But as Tate mentioned, the healthcare industry has really been struggling, and CVS has kind of been leading the charge in that area. They've kind of benefited negatively from Walgreens as well and other retail healthcare companies with the influx of different ways that consumers can get various healthcare options via online or different companies really entering the space. Secondly, we sold Allstate. This ended up being a pretty good sell for us, over a $10,000 gain. And we just thought within this industry that the stock was pretty overvalued and that there was other opportunities elsewhere. Finally, AbbVie was another great sell for us. I believe we netted over $30,000 from this sell. And we kind of used the AbbVie money to purchase Pfizer. AbbVie had run up and was essentially at an all-time high. So we believe that this was a good time to sell and get into a more undervalued company that we believed was undervalued in Pfizer.
Just some closing remarks from us. We did have Simon Hines come and talk to us. He graduated Dort about 2 or 3 years ago, and he now works for a crypto company over in Germany. He was talking to us just kind of about like what is cryptocurrency, kind of the business behind it, and some of the use cases. So pretty interesting to hear from them. Interesting to hear about crypto. It's been a really explosive industry lately, and especially ever since the election. I think Bitcoin's probably up close to 30-40% since the election, along with a whole bunch of other cryptocurrencies. So just certainly something to keep in your mind. And then we are going to try and do videos every month from now on. So expect a video towards the end of December talking about what we've done for the last month.